If you've ever thought, is this a bad time to invest? Or what if the market crashes right after I put my money in? You're not alone. Every investor, from complete beginners to billionaires, faces the same market cycles: booms, busts, crashes, and recoveries. And here's the good news. History has already taught us the lessons. We just have to pay attention. In this video, we'll break down what past market cycles can teach every investor, especially beginners, and how you can use these lessons to invest smarter, calmer, and with more confidence. What is a market cycle? Before we dive in, let's quickly define a market cycle. A market cycle is the natural rise and fall of markets over time. While every cycle looks different, they usually follow 4 stages. Expansion: the economy grows, markets rise. Peak: optimism is high, prices feel unstoppable. Contraction: fear sets in, markets fall. Trough: pessimism peaks, followed by recovery. This pattern has repeated itself for over 100 years, through wars, recessions, bubbles, and technological revolutions. Lesson number: market crashes are normal. One of the biggest mistakes beginner investors make is thinking that market crashes are rare disasters. They're not. Historically, the stock market experiences a 10% drop almost every year, a 20% or larger drop every few years. Think about the Great Depression, the dot-com bubble, the 2008 financial crisis, and the 2020 COVID crash. Each one felt terrifying in the moment. But here's the key lesson. Every major crash has eventually been followed by a recovery and new highs. Crashes feel permanent when you're living through them, but history shows they're temporary. Lesson number 2, emotions are your biggest enemy. Market cycles expose one thing over and over again: human emotion. At market peaks, investors feel overconfident, greedy, afraid of missing out. At market bottoms, investors feel fear, panic, hopelessness. The problem? Most people buy when prices are high and sell when prices are low, the exact opposite of what works. Successful investors learn to stay calm when others panic, stay disciplined when others get greedy. Your ability to manage emotions matters more than predicting the market. Lesson 3. Time in the market beats timing the market. Beginners often ask, when is the best time to invest? History gives a clear answer. The best time is as early as possible, and to stay invested. Studies of past market cycles show that missing just a few of the best market days can destroy long-term returns. Those best days often happen right after the worst days. If you wait for the perfect moment, you usually miss the recovery. The lesson? You don't need perfect timing, you need patience. Lesson number 4, diversification protects you. Another repeated lesson from market history is the danger of putting all your money in one place. Every cycle has its winners and losers. Tech stocks soar, then crash. Real estate booms, then cools. Certain countries outperform, then fall behind. Diversification, spreading your money across different assets, helps. Reduce risk. Smooth out returns. Keep you invested during downturns. You don't need to pick the next big winner. You need a portfolio that can survive every cycle. Lesson number 5, the news is not your friend. If you followed financial news during past crashes, you'd hear phrases like, "This time is different." "The system is broken." "Markets may never recover." Those headlines appeared in every major downturn in history. News media is designed to grab attention, fear, focus on short-term drama. Long-term investors learn to tune out the noise and stick to their plan. Practical tips for beginner investors. So how do you apply these lessons today? Here are a few simple rules. Invest consistently, not emotionally. Expect market drops. They're normal. Focus on long-term goals, not short-term swings. Diversify instead of chasing trends. Stick to a plan before panic hits. The best investors aren't the smartest, they're the most disciplined. Every market cycle feels unique, but the lessons stay the same. If you learn from history, you don't need to fear the next downturn. You'll be prepared for it. If you found this helpful, hit like, subscribe for more beginner-friendly investing content, and comment below. What part of investing makes you the most nervous right now? Thanks for watching, and I'll see you in the next one.